Hello everybody. So it's been a few weeks now since I recorded my last video, and during those weeks I was a little bit busy doing other things, mostly parenting, and we've been on the move. We're currently in Bansko, Bulgaria, like the mecca of digital nomads and world schoolers. So we've been busy with that a little bit. So I haven't been analyzing stocks for the last couple of weeks, let's say 3 weeks, but I was zooming out a little bit and thinking about my strategy overall, more holistically on all our assets of our family and our retirement plan, our asset allocation also, and looking more on the bigger picture of all our portfolio, and also looking at my performance so far and how am I with that. And I kind of want to share it on my channel here. I don't know if it's gonna interest everybody, but I feel like this channel is kind of part of my investing journey, and I do want to share it. It's gonna be I'm gonna probably record it in one or two take, but I'm gonna break it into a few subjects and upload a few separate videos about my thoughts and my current plans and our retirement plan, and then I will get back to my dividend strategy and analyzing stocks and sharing my thoughts about specific stocks on the channel. So in this video I want to review very roughly my performance so far with my dividend strategy. So for whoever was not following so far, I have started around June 2024 with a specific strategy with dividend stocks, where I buy dividend stocks which yield above 3%. I strive, sometimes I have a few that are yielding less, when I think they have some kind of an upside, like a dividend value investing, although I have a few cases where it's more of a swing trading between price fluctuations, but this is the minor case. In most cases, I do search out for dividend stocks when I think they have an upside also, and when they do reach my target valuation or something changes in my thesis, so that I think they have no upside anymore, I sell them and rotate them to another dividend stock that does have an upside. In my opinion, I don't have to do it, of course. I can just keep on holding this stock, but ideally I would switch to boost my performance, rotate to another dividend stock. So I have been doing it since June, and when I did start in June, I was sitting on a huge pile of cash, and it took me the best part of this time to allocate all this cash. I announced around 3 months ago that I managed to allocate all the cash I wanted to dividend stocks, and I will kind of reached my target cash position, although since then I got another lump sum of money, so now I have more cash I'm sitting on and I need to allocate it again. But true to a few months ago, I did already finish deploying all the cash I wanted. So again, starting from around mid-June, it was around 16th, 17th, 18th of June when I finally decided I will kind of all in on the strategy with my spare cash, and I managed to find already about 5-6 stocks and on the first week, and since then it was kind of dripping, and I was sharing on my channel my changes also in the portfolio. So let me share my screen and share my numbers a little bit. So those are my numbers, and for me, I'm from Israel, and I calculate everything in Israeli shekels, and that's one of the main reasons I wasn't showing my main spreadsheets so far. Maybe gradually I will, but I have my main spreadsheet when I have all my stocks and my gains and my losses and all, but it's mostly in Israeli shekels. So I will usually in the videos will create a kind of a separate spreadsheet just to show what I want to show and to translate it to readable all around the world, and specifically in US dollars. So currently, right now, my total invested in the strategy of dividends is around 1.4 million shekels, which is almost $400,000. This is what is allocated specifically to the dividend stocks, the new dividend stocks. I have one old dividend stock, which is Douglas Dynamics, which I hold from previous years, and I do not calculate it because it was not part of this strategy, and today I wouldn't buy it. So I'm taking it out of my calculation. I also have a few CEFs, just very, very small positions, but I'm also not calculating them. So those are all part of my income portfolio. But for the matter of this video, where I want to kind of check out how my strategy is going with dividends, I specifically took only the dividend stocks that I bought since June, a little bit before I bought Roche. So currently I have 400,000 allocated almost to this strategy, and I have already sold a few stocks. So to show the stocks that I shared all of them here on the channel, but to show the stocks that I did sell since I began this strategy, those are my recent sales during this year, where Billerud and Bank of Nova Scotia I was holding from before, so I'm not gonna calculate them. So I did sell Roche with my strategy for a profit. I made a little bit on J&J with the swinging, and I'm just will share that I increased my position again when it trended down, and now it's trended up again, and I'm ready to reduce my position back and make just another around $1,000, $2,000 on it. So this is J&J, and I bought the TRP and Sobo just before the spin-off and sold them also for a profit. And I'm with my classical strategy, I just implemented it just right with Altria Group also. So my gains, this is again in Israeli shekels. I will translate everything to USD. I'm taking into account that I'm paying 25% capital gain tax on everything, although I sometimes have losses from my previous, like a goose that I'm selling now, and I have a realized loss that I tax shield, but I'm not taking that into account. I'm gonna take the conservative view on everything and assume I'm paying 25% capital gain tax on every sale I make. So this is after 25%, and taking only Roche, J&J, TRP and Sobo, and Altria. My gain was 42,000 shekels, which is around $11,000. So this is all my realized gains already after tax for the stocks I have already sold. Now for the stocks that I'm currently holding, so those are the stocks I am currently holding with my dividend strategy. Again, I'm excluding Douglas Dynamics from here, and Café de Coral also. Those are things I bought before I started the strategy. Those are the main, this is the most of the capital anyway, but the ones that I did by employing my strategy, and all my buys since June last year. So those are the current dividend stocks that I am holding. This is all in US dollars. I just prepared it just to select from my main spreadsheet. As you can see, nothing edited here. Those are all the stocks, my gains and losses on them. Yeah, just looking at it, I feel really good with my strategy. I see that my most higher positions are the ones that are up, and the ones I'm mostly down on, I kind of either I knew it and prepared myself for it, either those are small positions like Hershey's, which already trended up but it was really down, and the Conegra, which I thought it has more of a downside than an upside when I analyzed it, and I kind of holding it very small position just for the high dividend yield, and the realty income, which I also knew that it's probably not the bottom. So those are my biggest losses so far. Of course, it could always I will have bigger losses in the future. On the other hand, I have a really a very nice gains, and I'm happy to see that my two largest positions that I allocated are the ones that most up also. So it kind of gives me an affirmation that maybe, just maybe, I know what I'm doing, but it could also be a coincidence. Of course, we'll see with time. So again, those are my stocks that I'm holding currently, and those are all my gains and losses on them, which amounts to $29,000. It's around 106,000 shekels, to $29,000 unrealized gains. So supposedly, if I would to realize them and to sell the stocks, I know, blessed for me to sell dividend stocks, but if I would sell them when they reach, if I would have sold right now all of them and gained, realized all my gains and paid 25% tax on all of it, of course it's not realistic, but again, I'm being conservative. I'm gonna assume I allocated all the cash during this time. I'm gonna assume, I'm gonna talk about that in a minute. I'm gonna assume I'm paying all the maximum taxes, and so those will be my gains after the tax. And on a cost basis, which is currently the cost basis of the stocks I am currently holding, unfortunately, I don't have the exact amount that I allocated to the strategy because it was fluid during this time. But what I can see now is the cost basis of the stocks that I am currently holding, which is this 359,000. Which is this, and so and to take into account that I have already this gain, and adding a little bit, just a few of it, just a part of it, I added back to here. So let's say that this was my initial investment into this strategy, and my total gains are around $33,000 on it. So a few assumptions I made. First of all, I assumed that I was invested all this time, and I was not. I was sitting on a lot of cash, but I don't want to give myself any discounts on this matter because obviously my alternative would have been to just allocate at day one all this money into ETFs, and which I would have done in 1 week, in 2 weeks, and I would have been invested all this time if I would just, I don't know, buy a 40-60 portfolio of 60% in a S&P 500 and 40 in bonds, or any kind of allocation that suits me, even an ETF that is already has all the allocation inside of it, I would have been invested all this time. So I'm not giving myself any discounts on the fact that I was sitting on cash. It was my problem. It was due to my strategy that I was sitting on this cash. So I'm assuming I'm calculating the return as if I was invested all this time, which I think is very fair. And the other assumptions are, as I said, that I'm paying the maximum capital gain tax of 25% on all my sales, even the ones that I haven't realized yet, which I think is super conservative, and obviously it's not the case. And I only took out of these gains that I already had in the past, I added back just 2/3 of it back. So I'm being really conservative with myself. So the result of $33,000 gains on an initial investment of $350 amounts to around 9.6 return. This is just capital gain return. I'm not talking about total investment that includes also dividends, which I will touch upon in a minute. So this is just the capital gain return of 9.6. Now again, I started this strategy around 17-18 of June, when I bought my first I think Bristol Myers and BKH were my first stocks, and during this time, if we look at S&P 500 and SCHD, so S&P 500 during this time from 17 June until today made 6.7. Now obviously it's been more up and it just trended a little bit down just lately, and if we look at the whole year, it's around 14%. Also, of course, it's very varying and very volatile. It depends on just a few which days I take, but just to have an approximation. So S&P 500 for those specific dates did give only 6.7%. I still think it's a very nice return for less than a year. And SCHD during this time, again, it's very arbitrary because of the dates that I selected. This is SCHD. Again, for the same dates until today, this I'm recording it, it's March 3rd, 10.2%, but for the whole year, for example, for the past year, it did 8.6. So again, it very depends which dates I take. So those are the returns of SCHD and the SPY, VOO, S&P 500 for this period, and this is my return only in the capital gains. Now, just to mention the dividends, my dividend yield is much higher, of course, than SPY, which is around 1.2%, I think. My current dividend yield is around 4.57, I think, 4.59. This is my dividend yield, so it's much higher than S&P 500, obviously, and it's higher than SCHD also. It's one of the reasons I like my strategy. It gives me a higher yield while still giving me the capital gains. I haven't checked how much really in dividends I got this year. It's not really relevant. Again, I was sitting on a lot of cash. If I would have checked, I would probably see it somewhere in the middle between S&P 500 and the SCHD, just because I was sitting on this cash and I wasn't really collecting dividends all this year, but I would gradually was collecting more and more dividends. But again, the reason I'm making this video is to look forward from now on, and from now on I do strive for my cash to be deployed all the time into dividend stocks, and currently my yield is 4.59, so I have a higher yield also, so it gives me a total return of a little bit higher even than SPY and SCHD. But I think that overall my performance so far has been pretty much on par, I would have said, with the market. Nothing really market beating, but nothing really also dragging after the market. And I want to share a few thoughts about it. So again, I think my performance is pretty much on par with the market, but I'm working really hard on it. And of course, sitting just on the S&P 500 would have been much easier and still getting pretty much the same return. I'm not gonna really take very seriously the difference between my 9% and S&P 500 6%. Obviously, it just depends on the date. I think that overall it's pretty much the same and the same level of return. But I have been working really hard on it. And is it worth it? So a few answers. First of all, I'm not sure yet, and this is something time will tell, and maybe in a year or two I will understand that now it's not worth it and it's gonna be totally okay, and maybe I will switch to ETFs, maybe I will choose some kind of dividend ETFs if I'm into dividends, and maybe I will do some kind of a blend where I need to work less. Maybe I will decide not to sell dividend stocks, only to buy dividend stocks when I see very good opportunities, but not to be really under any pressure to sell them. I'm not putting too much pressure on myself, but a little bit to sell them when they do reach my price target. I can always decide that I'm not doing that anymore, and I'm just leaving them to be. And if there are very good opportunities, I can always rotate from my worst idea to my best idea, but I don't have to do it. So we'll see with time if it's worth it or not. But a few thoughts on, yes, the numbers are pretty much the same maybe for my return and the return of my benchmarks, but what I feel is that my return, I understand where it is coming from, and I understand the drivers of my return and of my gains. And this is connecting me to the video I did on S&P 500, where yes, its performance have been very good during the last years, but to tell you that I completely understand why, and can I project what would be the returns in the next decade, for example? No. And moreover, I suspect the returns of the market, is all the market. And what I'm saying is also relevant for SCHD, just because of the valuations, which are also very high. I expect the returns to be lower for the ETFs. While my strategy, I hope that I would be able to employ it in all market conditions, maybe when the there is a peak of a sell-off in the market, like if it's 2008, like if it's to March 2020, then maybe during this time I will maybe be able to pick up some stocks, but I will not have real capital gain to realize. So maybe there will be specific times when I will not have capital gains, but I do hope that in all market conditions, even when the market goes sideways, even when the macro is tough, I do accept, because it is value investing on value stocks. Still, although I did have some disappointments with value investing, which I'm still trying to resolve, but my dividend strategy is focused more on value. When I seek dividend stocks that I think there is some kind of a value in their price also, and this will be true even when the market is not so bullish, I hope, and maybe there will be even more opportunities for value investors when the market is not as bullish as it has been during the last few years. So although the numbers kind of look the same to me, at least, I know there is a difference here, but for me, I understand that it's pretty much the same. I think there is a very big difference on the quality of this return. For myself, I think it suits me better, and again, this confidence that I will be able to continue with it, while I don't have this confidence with the indexes that will be able to provide the same return for me. If I did have this confidence, of course, I would have just invested in them, right? So this is my first thought. The second thought is that I think I can improve. This again, I was very conservative with myself, but during this time I was still very busy trying to allocate all the cash I had, and now I really have the opportunity. Now I again have cash to allocate, but I will do that. I have done that once, I will do that second time. I'm getting more and more comfortable and more and more laser focused on what exactly I'm looking for, and looking ahead, knowing that I will be able to deploy all my cash and then move from my worst ideas to my best ideas, and to have more and more stocks that I am tracking. I'm tracking currently around 100 dividend stocks already that are really my target stocks that I would really like to own if the price is right and if there is an opportunity for an upside. So maybe a lot of them, when I get there, I will understand that they're uninvestable for me, like it often gets, but still I'm tracking more and more stocks. I think I will have more and more opportunities. I am following more and more stocks, and I'm seeing their prices, and I really, one of my goals was to have more agility with tracking stocks, with recognizing opportunities in a timely fashion, and to be able to react faster, and do more buys and sells, which is kind of a bless for me in the value investing world, to have that agility. And I kind of feel I am achieving that, maybe not to the extent that was my fantasy, but I do now when a dividend stock is down, I see it on the day, and I'm already able to check it out, and I'm already, if it really is a good opportunity, I'm able within a day or two to buy it. So it's something I really like, and I feel like going on, what I'm saying is that going on forward from now, I think I will be able to do even better with my performance. But of course I also had the wave of the bull market that took me, so in a different market condition, maybe I will have better tools, but the trend of the market will be worse. So we'll see what will be my performance in the future. We'll see what will be the market conditions, of course, also. So those are my thoughts. My final thought, and this is connecting me to the other videos I want to record now about my kind of process I've been going through in the last few weeks, where I am becoming more and more focused on income. So I do still think that the upside, the gain in the share price appreciation that I'm able to gain with value investing in dividends will be the bigger drive for my returns. And yet I've been doing a few calculations which I will share in my next video, where I understand that if I do focus more on income and look more at the dividends, and of course I have income also from the cash I'm sitting on and T-bills, which are yielding 4.5% currently before taxes, and also we have an apartment. I'm gonna talk about all that in the next video, but once I do shift my focus a little bit more on income, I'm realizing that we can cover most of our annual expenses just with the dividends and the income portion of our assets. So the reason I'm mentioning it now, it's all coming up in the next video, is that my dividend yield is also higher, which helps me with the income portion also. So I feel like with my strategy, I'm able to achieve a return of growth companies while still having a very high yield, higher even than the SCHD of 4.6%, which is really nice, and I think I can make it maybe even better, but then of course I will sacrifice growth, so we'll see. So overall, I'm very satisfied with my strategy so far. Of course, time will tell. It hasn't been even a year now. I am doing this review just to share because I did it for myself, so I thought I will share with you guys also. But obviously, we need more time to look at it. I do have still a few worries with my strategy, mostly that I'm always going against momentum, and I will talk about that when the time gets there, and I will kind of chew this thought more. I will talk about it. I do still have some worries with my strategy, but overall I think it's going really well so far. I'm very satisfied, and I feel like as the dividend strategy, there's something simplified about it. I'm not analyzing stocks as deeply as I used to, and I like it because I feel like I talked about it already, but like the over analysis also was a pitfall, and sometimes looking at things just kind of simple, and they keep it simple stupid is the right way to go, especially with stocks, I feel. And again, I feel I have more agility. I'm following more stocks. I know more stocks. I get to know more stocks. I'm more diversified. I have less concentrated allocations, which I used to think is not a good thing, but now I do think it's a good thing. So overall, I'm very satisfied currently with my strategy, with my performance, and we'll see. And I'm going to continue doing that and share it, of course, on my channel, my buys, my sells, and what I'm doing. And we'll see. We'll do a review again in a period and see how it's going. Of course, I want to begin tracking all my portfolio. This is just a portion of my portfolio. Currently it's around half of my portfolio, this portion. I want to track all my portfolio also, but I kind of need to organize a little bit, tidy it up a little bit more, and then there's no problem. I can always backtest and look how I've been. So that's it. I don't know if it was very interesting. I don't know if it was very organized. We'll see how it goes after I edit it. But yes, I just wanted to share it, and I'm gonna continue sharing my other thoughts that I've been busy with in the last few weeks. So yeah, that's it for now, and I'll see you in the next one. Bye bye.